Okay, we're live. Hello, everyone. I hope you can hear us okay. And welcome to my live today. Happy holidays to everyone. I hope you're having a wonderful holiday break if you got a chance to break. If you're like us, we're still working, but we're excited about the new year. So if you're excited about this new year, in 2 days, we're going to be joining into the new year. Put a fire emoji down low. Comment below if you are excited and ready to go into this new year. Today on my live, I have my friend and colleague, James Barefield, who's branch manager of Fha Loans. Hey, James, thank you so much for joining me today.
Thank you so much for having me, Carla. It's exciting to be here. Happy New Year to everyone.
Awesome. Yep. James and I have been closing deals together for over 5 years. And I
Yes.
appreciate you so much. You are awesome. You and your team are wonderful. And I appreciate working with you.
Oh, I always appreciate working with you, Carla. You're such a jewel in this industry, and you always take care of our people, and always very creative when it comes to submitting offers and winning people these deals on their dream home. So it's awesome to work with you as well.
Thank you. Thank you. So today we're going to talk about what to expect in the new year in 2022. So I've had several conversations with people who said, you know what, I'm going to hold off. I'm going to wait and buy a home in the next year. And they think the market is going to get a little better for buyers. So maybe they think, and they're telling me they think that they can get a better deal in the next year. And I'm like, well, I'm not so sure about that, but we'll see. I got James here. He's going to share with us what's coming up in the new year and if anything has changed. But first, just want to let you know the market is still on fire, like everyone is talking about. Nothing has changed really. A little slowdown for the Christmas holidays, but not really, because people still need homes, right? The average sales price for Dallas is still around 343,000, and for Fort Worth is an upper 300s. So, and that's higher than it has been. So, still a seller's market. Still sellers favor a seller's market that favors the seller. So, if you are a seller and you have some equity and you want to sell your home, now's a great time to do it. James is going to share with us some things that may change or be better for the next year, especially with the interest rates.
Yes.
So, James, can you share with us?
Yeah, absolutely. So I wanted to talk a little bit about a couple of the new things that are going to help us in this market coming up in the year of 2022. We had some great things come through. I know that, we've been in this seller's market, and in any seller's market, we've been in an upward environment when it comes to prices. So a couple things that are going to help us out as a homeowner or a buyer going into next year. And one of the best things that I do like is the increase in the loan limits. It doesn't sound like much, but these things help us be able to qualify for loans and different type of loans that have a little bit more flexibility. For instance, such as an FHA loan. We just come off of a loan limit of like 411,000. Now that is all the way up to 450,000. So that meaning that you can buy a home, with a 580 credit score, close to a $500,000 home, and still qualify for an FHA loan. That
That's
is actually
awesome.
huge, and it is much needed in this environment, especially if you don't have the 620 or you don't have a super high credit score that's over a 700. Really on any conventional loan, you really, if you're just one buyer and not have a co-buyer, you really probably want to have a 700 credit score to get qualified for that. So with FHA bumping that limit up, that obviously gives a lot more flexibility in today's market. In the fall of suit, we also had some loan limit increases for conventional as well. That loan limit has actually went up to $647,200. So that is another thing. Now you're able to buy over a $500,000 home and qualify for traditional mortgage. And a lot of us, we want to go for these traditional mortgages for one reason. They usually present us with the opportunity to get the best interest rates on the market. Once you get outside of these loan limits and get outside of these traditional programs, you start to have to pay a little bit more money. You got to put more money down. You got to pay a higher interest rate. So with these two increases, those are going to be huge for us going into 2022. Another thing is that, if you are a client that is looking to fit into a down payment assistance program, a lot of these have removed the purchase price limits. Before we had a purchase price limit up to like 350,000 with a
Mhm.
T-Shack loan, but now there's no purchase price limit. So, you can go and buy a $400,000 home and get down payment assistance to help you out to be able to purchase that. That is huge. That is
That's
huge.
wonderful. Yeah.
And it's much needed because of the housing market and the pricing environment that we're in. I know a lot of you, if you're looking at a home, you're probably going on there daily, weekly, and even those people that saying they want to wait, I guarantee you, if you're saying you want to wait, that same house that you're looking at is higher every time you look on there. That square footage that you're looking for is much higher. So going into 2022, the prices are going to continue to increase. I mean, we're still in a situation, and let me just kind of explain why we're in the situation that we're in with the upper prices. It's been a lack of inventory. I mean, that's the bottom line. There's not enough houses out there for the amount of demand, and when you don't have, enough product to fill that demand, then it becomes to be more pricey. So we've got buyers that are outbidding each other, that is driving up the prices. Sellers are not having to contribute like they did 3 years ago. They used to love to give you some money to buy a house, but it's just a different environment now when you've got so many buyers that are coming in. You've got investors coming in. Here in Texas, we've got one of the best economies in the country. So, we've got a lot of relocation that's happening here from California to Chicago to New York to Florida. People are moving here because we have such a great environment. You get a lot more for your money. So you got to prepare yourself to be, a little bit more competitive. So yeah, those prices are going to continue to go up. The builders are running a little bit behind with what's happening in the market as far as being able to put up inventory at a fast enough pace to keep pace with what's going on in the market. That trend is likely to continue. I mean, the building permits, this is a key indicator of, what we're going to have as far as inventory coming up for them. From a builder standpoint, the permits have actually been kind of flat, and what that tells us is that they're going to continue to build, but they're not building at the pace that we need them to build. So what I've seen is that the existing home sales they're still running about 90% of the market. So yeah, 90% of the market are still existing home sales. So, but with those new loan limits and stuff like that, that should be able to help us out. The down payment assistance is still there. We still have those different programs. If you're a veteran, the great thing about that is you don't have to have any down payment. I know there's a year or so ago there used to be limits on, VA purchase price. I mean, if you went over that, you had to put down a down payment. The great thing now is if you have all of your entitlement, I mean, you could buy $1 million home without any down payment as long as you can qualify on the other metrics from, credit scores and debt to income ratio. So those are some great things that are going to continue to allow people to be able to buy. I would say in this market, you want to try to give yourself the greatest possibility to be able to be competitive out there. So any extra money that, if you could save extra money, put yourself in a position where you maybe could put $5,000 over, that just makes your offer look so much better, when you're competing against other people that may be not asking for anything from the seller. They may be coming in, you competing with an investor or in a cash offer. You got someone you competing against a cash buyer and they're coming in with cash. I mean, maybe you can win that over them if you have maybe another $2,000 or $3,000. I mean, someone may be willing to wait another week to get extra $2,000 or $3,000. So cash is always king, and you always want to try to save as much as you can to try to give yourself the greatest possibility to be able to win that offer out there. Would you agree, Carla?
I agree 100%. And, it's just what you said. Everything you shared was correct. If you're a buyer and you're waiting for the sales prices to go down, you're going to be waiting for some time. I suggest that you link up with James and have him put you on a program or see if you qualify for a down payment assistance program that will help you, have a low payment, maybe zero down or pay a smaller amount down. Those are the things that my clients have focused on, and they've been able to buy their dream homes, even in this market.
Yeah, and it also gives a little bit more flexibility. Let's say you do have your money in your down payment, but you don't have that amount to be able to outbid the next client for that house that you really love. I mean, maybe with the down payment assistance program that's offsetting some of your costs, that may put you in a position where you can do that, to where you can win that deal. So yeah, I definitely agree with what Carla said. It's not just the houses that are going to be going up. Interest rates are projected to increase in 2020. Now, it's supposed to be a gradual increase, and they are projected to be up over 4%. Now, we've been spoiled with some of the historic lows, but even at 4%, the rates are still very, very good historically. I mean, if you ask some of your parents or some of the older generation, I mean, they had rates above 10%, some of them
Yeah.
18% on a home purchase. So don't be shocked by seeing a 4% rate. That is still an awesome rate in this environment. I've been doing this a long time. Actually, when I first got into the market, into mortgages, rates were 10%. I don't know. We did, arms at 10%. So
Mhm.
4% seems like an awesome opportunity. And don't let, the rates being higher than what you're seeing on all the advertisements, the 1.75s, the 2%. A lot of those things are running significantly behind the market. They don't tell you the cost of getting the rate, but don't let 4% stop you from buying a home. The more the rate goes up, the more the price goes up, the more you pay. So my advice is always to take advantage of the opportunity that is in front of you as soon as you can. Because come spring is a very hot market. You got more competition that's coming in there. If you can get something going now, you want to try to put yourself to where you don't have to compete with everyone and have to pay more than what you should, or have to pay, $10,000 more for the house that you saw, 3 months ago, or have to pay $100 higher in a mortgage than what it would have been if you would have got it. Don't bank on everything going down. It's going to continue to go up. And one of the key metrics that we look at, in our industry is the affordability index. What can families actually afford? Our prices have been so good, and we've been so blessed here in Texas with good prices and what you can buy, for your money here. The affordability index is there. So, I mean, people can still afford these $500,000, $750,000 houses and still live comfortably. So the affordability index is what we look at, and we still have people that can, afford these different things. So you can't bank on stuff going down. I would just say, if you can, try to take advantage of something as soon as you can. That way you can maximize your financial outlook for the long term.
That's right. That's right. It's very true. And a lot of our clients that we're seeing are moving, like you said, from California. We have several clients who moved from California, sold their homes there,
Yeah.
realized that they have a home here on land and still pay less than they were paying in California. So people are just smart living, and they're working from home too. That's changed a lot
Yes.
with COVID, and people are working from home and realize that, I don't want to pay for a 3 bedroom, a 900 square foot 3-1, you know, and pay $500,000 for it when I can come to Texas and, get a 4.3 on an acre, get a office in my home and put my kids in a playroom so they can, because they're at home now too.
Yes.
And so it's just a better opportunity here in Texas. And that's why we just don't see any of this changing anytime soon. Um, it's a great time for sellers who have some equity in their home. You are the ones that probably can take the best advantage of this type of market, because you can sell your home. You have that cash that James was referring to compete in the market, or build a new home. And, you can do that's an option as well. And we have a lot of flexibility now because it is a seller's market. We can, you're flexible on that move out date. There's so many different things that we can do on that contract to help you. But for pre-owned homes, if you're looking to sell your home, it's a great time for you to take advantage of that equity and then find
Yeah.
something else that's really nice that you like.
Absolutely. Everyone's equity is up significantly. I mean, if you own a home, and especially if you own a home within the last, 5 to 10 years, and even some of these people that have bought homes within the last 3 years, I've got clients that I talk to. Matter of fact, I got a client that reached out to me today that's looking just to refinance and remove their PMI. I was like, are we already at that equity position? Yes. I mean,
Yeah.
people's homes. I mean, people are gaining $100,000 in equity in a year, or even more in some
Yeah.
cases, depending on the area where you live. I mean, you just can't beat home ownership as an investment. Obviously, we got to have somewhere to lay our head, but there's not many investments that you're going to be able to put your money into to be able to get that type of return. I mean, we don't want to forget about the tax benefits, the writing off of the interest, your insurance, stuff like that, in order to make our taxes better for us. So if you make a certain amount of money, obviously you're looking at a way to try to lower that tax bill to Uncle Sam, and home ownership is one way that you can do that. And so it's never a bad time to basically own a home, especially depending on what your goals are. You just want to set up, whether you're looking at staying in your home for 5 years or you're looking at staying in there for a long time. You just want to get with the right professional that can create the right plan that's going to maximize everything that you're trying to do. And that's why it's good to get good people on your side. It's good to have a good realtor that knows what's going on in the market, that knows how to present an offer that is aggressive, that knows how to get the interest of the seller. And some of this stuff can just be done by just the wording in the offer. And Carla is very, very good at that. Like she said, we've helped people move here from California. And I mean, they love it. I've got people, we have people from California, New York,
Yeah.
Chicago.
Mhm.
I mean, these people are moving in, and some of them, have limited money down. Some of them are, selling their homes where they're at and putting down the big money.
Mhm.
But if you own a home and you're looking to upgrade, it's not a better time to capitalize on selling your home, because your equity point is probably at the greatest point it's ever been. You can take that equity, you can always put it down on a new home and bring that mortgage payment down something closer to what you've always been used to. It just gives you a lot more flexibility and options.
It does. It does. You are so right. And thank you so much for the kind words. My
Yeah.
team and I work really hard because sometimes we do have clients that come in from another state and they only have a weekend to find a house. And so we definitely have to know how to put those contracts together so that we get our clients' offer accepted before they leave on Sunday. so
Yeah.
so we
Yes.
definitely work that out. But second, another part of the team part of that is you and your team coming in and working your magic and getting our clients financing closed on time. And I mean, you guys have just been perfect. So we've been a perfect team for
Thank you
the
so
last
much.
5 years, and we are so
Yeah.
looking forward to the new year. One thing that you brought up is refinancing. As you
Yeah.
know, the forbearances have come to an end for a lot of homeowners who took advantage of that during COVID. Is refinancing an option for some of those homeowners?
Oh, absolutely. Now, if you have taken a forbearance, the key there is you just want to be out of that forbearance for at least 3 months. But once you're out of there, then you can refinance your property and just kind of piggyback off of the equity situation. The equity has allowed people to restructure their debt. I mean, I've saved people $750, $1,000 a month in bills with a refinance. I know a lot of us have been in the pandemic, been inside. Some of us are using our credit cards a little bit more. And credit cards, I mean, to be honest, they're good. They're good to use it, but the way that the interest works on those things, if you make a minimum payment, you'll never pay it off. So if you charge up a certain balance and you're just making that minimum payment, you're looking at that same balance every single month while stroking the check. And so with that equity in your home, what that allows you to do is take that daily compounding interest, put that into a simple interest loan. Now you're saving a certain amount of money. And if you got a good loan officer, we can craft some solutions and show you how to pay off your home fast. I mean, we're literally saving people hundreds of thousands of dollars in interest over the life of their loan, helping them helping them pay off their mortgage faster, or creating that extra flexibility on a monthly basis just to have a little bit more breather in their day-to-day life, whether it's extra money to go out, extra money to go shopping, extra money to save for the kids' college. I mean, your mortgages can be used and leveraged in so many different ways to create wealth and make your life so much easier. That's another great benefit of owning a home. I mean, if you don't own a home, you don't have that equity. You don't have that extra tool in your back, in your pocket to be able to utilize and change some things around. But I definitely tell you, I help out so many people with the refinance, and the cash out refinance can allow you to do that. Another thing is you've got the equity in the home. Let's say you have one home, but you thought in your mind, hey, man, it'd be nice to have an investment property or another property. Well, you can take the equity out of your home and use it for a down payment on an investment property, or take the equity out of your home and put it down on a new home and turn that home into an investment property and have someone paying it. I'm doing these things myself. I'm not just talking about it. I mean, I actually use the stuff that I'm trying to tell you guys here on this live cast. So these things actually work, and they can help you utilize and just get more wealth. I mean, that's the name of the game, is how we're going to get wealth, how we're going to be able to retire peacefully, how are we going to get our kids through college. I mean, these are things that are running through many families' minds on a daily basis. And with the right financial people in your corner, I mean, we can create these visions and make them become a reality.
That is so true. Everything you said is so true. Generational wealth. And we have Star. Hey, Star, thanks for joining. And she says that she said, yes, generational wealth, hashtag
Yes.
equity. That's right. The real estate is the best way to create generational wealth. And, rolling it, James just shared some great ways to do that. Also, if you're an investor, right now, a lot of investors are, kind of waiting around, but jumping in and buying properties for rentals right now is a good option. Even if the fix and flips are far and few in between, but creating the homes for families to live in is a wonderful way to create generational wealth as well. So I'm going to jump on here on the comments. We have a few comments. Hey, Lo, thanks so much for watching. She says, hey, James.
Hey.
And Michelle, hey, Michelle, thanks for joining. And Star, she says I'm on the servicing side. So yes,
Oh,
they can
that's cool.
refinance after
So you get exactly what I'm saying there, Star.
Yep, on-time payments depending on the equity. That's right.
Yep.
Because the hubby and I have done it too, trying to retire in 10 years. Okay, that is wonderful. That's wonderful.
That's what I'm talking about. That's what I like to hear. That retirement in 10 years, I mean, that's pretty good. That's my goal too.
Yep.
Once I reach a certain age, I want to be out of there.
That's right. Pretty soon we'll be talking about it, right? And managing it all.
Yeah,
right?
Exactly. Maybe sharing a cocktail on the beach or something.
That's right. That's right. Awesome. Well, if you like what you're hearing today, comment below and let us know. If you're watching the replay, we appreciate you guys joining us. James is sharing some great information that's going to roll us into 2022. If you want to buy a home or sell a home, all this information that he's sharing is relevant to you. Do you have anything else you'd like to share?
No, I just want to say, urgency is the key to really save yourself the most money coming up here. Obviously, you guys are seeing inflation with other different things, whether it's gas or, day-to-day food and stuff like that we're having to buy on a daily basis. So with that in mind, they have to combat this stuff in some kind of way, and they're going to have to raise interest rates to be able to do that. So obviously, that's going to affect what you're paying for your home. But I will say these things do go in cycles. I mean, I've been doing this a little while. There's always an uptime. There's always a downtime. There's always equity gaining time. There's always a refinance time. So the main thing, though, is just capture, secure the opportunity in front of you. The longer you wait, the more you usually pay. But if you do pay more, usually ways we can come back around and refinance and lower that stuff and save you 100, 200 grand. Just start the process. And that's usually the first step. Just start the process, gain a piece of home ownership, and start leveraging that to gain even more wealth and generational wealth.
That's right. And your first step is to give me a call so that we can talk about your situation, see what your goals are, what your plans are, and get you started into that plan to home ownership. I'll get you in touch with James, and he'll talk about the programs that are available and match you with the perfect program for you. So, but the first step is making that phone call. Don't wait, because if you wait, you're probably going to lose it, or you're going to pay more, like James said. Right?
Yeah.
Either way, get started.
Yes.
Hey, Christopher. Said what is that? Big game.
I appreciate the flattery, Chris. I appreciate it.
That's awesome. That's awesome. Well, thank you so much for your time and sharing all this information today with us, James. You and your team are awesome. I know I just keep saying that, but it just means a lot.
Thank you. We always try to get better.
There's a lot of loan officers.
We're never content.
There's a lot of mortgage
brokers trying to
brokers.
raise our game. So
that's right. Who won't qualify for different programs for whatever reason. And I love that you always work to the very end to find the best interest rate, the best program for our clients. And that means everything. So I appreciate you, and I'm looking forward to the new year. If you guys want to take your dreams and make them a reality, give me a call. Thanks so much for watching our live today, and have a wonderful new year. We'll be talking to you soon. Bye.
Happy New Year, everyone.
Thank you. Happy New Year. Adios.